Have you heard the news? A new age pension update in Australia has many retirees paying close attention. And if you or someone you love receives the age pension, this is something you don't want to miss. While many people assume their payments simply arrive each fortnight without much changing, the truth is that pension rules, payment rates, eligibility requirements, and support programs can change over time. Missing an important update could mean overlooking financial assistance, misunderstanding your entitlements, or making decisions that affect your retirement income. Stay with me until the end because one of the most important reminders is something many retirees forget, and it could make a real difference in protecting your benefits. Welcome back to Move Smart AUS, the channel dedicated to helping Australians stay informed about retirement, age pension updates, Centrelink information, and practical financial tips. Our goal is to explain important topics in simple, easy to understand language so you can make confident decisions about your retirement. If you enjoy honest and helpful information, don't forget to subscribe and turn on notifications so you never miss an update. Now let's get started. For many Australians, the age pension is more than just a government payment. It's a vital source of income that helps cover everyday living expenses such as groceries, electricity, rent, fuel, healthcare, and other essential costs. Because of this, even small changes to payment rates or eligibility rules can have a meaningful impact on household budgets. One of the first things retirees should remember is that age pension payment rates are reviewed regularly. These reviews are designed to help payments keep pace with changes in the cost of living. While increases can provide welcome relief, it's important to remember that rising prices for food, insurance, utilities, and medical care can sometimes outpace payment increases. That's why it's always a good idea to review your personal budget whenever payment rates change. Another important area that deserves attention is the income and assets tests. These tests help determine whether you qualify for the full age pension, a part pension, or no pension at all. Many retirees mistakenly believe that once they qualify, nothing else matters. In reality, changes to your financial situation can affect your entitlement. For example, selling an investment, receiving an inheritance, purchasing a new property that isn't your principal home, or changing the amount of money held in savings or investments could influence how your pension is assessed. Even if your circumstances change only slightly, it's worth understanding how those changes may affect your payments. It's also important to keep Centrelink informed whenever your circumstances change. Updating your information promptly helps reduce the risk of payment errors, overpayments, or delays. Whether you've changed your address, relationship status, bank account, income, or assets, keeping your records current can save a great deal of stress later on. Healthcare continues to be one of the biggest expenses for retirees. Fortunately, many age pension recipients may also be eligible for additional support through concession cards and other government assistance programs. These benefits can help reduce the cost of prescription medicines, medical appointments, transport, and selected household expenses depending on where you live. Many retirees don't realize that state and territory governments may also offer additional concessions on council rates, electricity, water, public transport, and vehicle registration. These benefits vary across Australia, so it's worth checking what assistance is available in your local area instead of assuming you're already receiving every benefit you're entitled to. Another topic that deserves attention is deeming. Deeming is the method used to estimate income from certain financial investments for age pension purposes. Instead of assessing the actual amount earned, the government applies deeming rates to eligible financial assets. Understanding how deeming works can help retirees better understand why their pension amount may differ from what they expected. Although the calculations may seem complicated, becoming familiar with the basic principles can make conversations with financial advisors or Centrelink representatives much easier. If you're thinking about helping your children or grandchildren financially, it's also important to understand the gifting rules. While many grandparents enjoy supporting family members, giving away significant amounts of money or valuable assets may affect your age pension assessment under certain circumstances. Planning ahead before making major financial gifts can help you avoid unintended consequences. Seeking professional financial advice before transferring large amounts of money is often a wise decision. Housing remains another major issue for Australian retirees. Whether you own your home outright, rent privately, or live in retirement accommodation, housing costs continue to rise across many parts of the country. Some retirees may qualify for rent assistance if they meet the eligibility requirements. Others may benefit from state-based programs designed to help older Australians manage housing costs. Understanding which programs apply to your situation may provide valuable financial support. Scams targeting older Australians continue to increase every year. Criminals frequently impersonate government agencies, banks, delivery companies, and even family members. They often create a false sense of urgency, claiming your account has been suspended or that immediate action is required. Remember that legitimate government agencies generally do not ask for payment using gift cards, cryptocurrency, or wire transfers. If you receive a suspicious phone call, email, or text message, take time to verify the information using official contact details rather than responding immediately. Digital security is becoming increasingly important. Creating strong passwords, enabling multi-factor authentication where available, and being cautious about sharing personal information online can greatly reduce your risk of becoming a victim of fraud. Another helpful reminder is to review your retirement budget regularly. Many people create a retirement budget once and rarely update it. However, inflation, changing medical needs, insurance premiums, and household expenses can all shift over time. Reviewing your income and expenses every few months allows you to identify areas where you may be able to save money while ensuring your essential needs remain covered. Even small adjustments can make your retirement income stretch further. Many retirees also underestimate the importance of maintaining an emergency fund. Unexpected home repairs, vehicle maintenance, dental treatment, or medical expenses can arise without warning. Having savings available for emergencies can reduce financial stress and help avoid unnecessary debt. As retirement continues, your financial priorities may change. What worked during your first years of retirement may not be the best strategy several years later. Regular reviews of your finances, investments, insurance, and government benefits can help ensure your plans continue to meet your needs. One of the biggest mistakes retirees make is assuming someone else will automatically notify them about every government benefit they qualify for. In reality, many programs require applications or updated information before assistance can be provided. That's why staying informed is so valuable. Reading official updates, reviewing your circumstances regularly, and asking questions whenever you're unsure can help you avoid missing valuable support that may be available to you.